Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about the SEC's warning about self-directed IRAs, Alibaba's new AI chatbot, and the increase in mortgage demand. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The SEC recently published a warning regarding self-directed IRAs. What did it say?
Hey, good morning, Allison. Good morning, everybody. And here's the warning, and this is not to scare you against doing a self-directed IRA. It's simply to warn you that it is a common mechanism for fraudsters and scammers to have you set up a self-directed IRA to be able to invest in something. So let's talk kind of the basics of investing. You grow up, you make some money, you put it in the bank. So that's kind of like you make some interest. That's like 101. And then you have retirement accounts and 401ks and other things that are at the next level of sophistication. That's kind of your level 2. And then your level 3 is now when you get off into, venture capital, private equity, self-directed IRAs, which allow you in a self-directed IRA, you can buy a house, an investment house. You can't live in it, but you can buy investment property, if you will, and you can do several other things like using retirement funds to be able to invest in some private equity stuff. I've done that with some of my stuff. So I have one of these. Nothing to be scared of other than there are specific rules associated with them. So that's kind of the 3 levels there. The reason that the SEC felt the need to put this out, if you read through this, which it's kind of long and tedious, so that's why, good job checking in to hear what I have to say, is simply it's the people that are pushing, the fraudsters out there that are pushing certain things like crypto, saying, hey, own crypto in your self-directed IRA. Well, you lose if you do a self-directed IRA. You are responsible for all of the due diligence and all of that. There's nobody protecting you out there, which is their point. So whether it's crypto or some questionable real estate investment or venture capital or private equity, if somebody's saying, hey, send us your money. Golf suites as an example, just had an investor go through invest in golf suites. You have to do it through a self-directed IRA. So you don't have somebody like a Schwab or a custodian coming in and vetting the actual investment. So does that mean it's bad? No, it just means it would be the preferred method of fraud if there were a preferred method of fraud. So if you have any questions on self-directed IRAs or you're thinking about doing one, that's one where you should probably enlist the help of a professional, myself or somebody else, just to have them guide you through it, because the rules are complex. And if you violate the rules, it assumes an immediate distribution from the minute you violate the rule. So if you violate the rule 10 years ago and they don't catch it until now, that's as if you took the distribution 10 years ago, and then all the taxes and penalties and fees and everything associated with that are going to now be due, right? So overall, consider if you need to. It's pretty slick, especially if you want to buy like an investment property out of a big IRA. That's a way to do it, but you do have to follow the rules, and you have to know what they are, and you have to follow the rules associated with it.
Next, Chinese tech giant Alibaba recently hopped onto the AI chat space. Will this move the stock price?
Yeah, so I've been a long time. I would say, I've wanted to invest in China. I was a big China investor for a long time, and then had to get out when COVID hit. And I haven't really returned, even though some of the stocks have started to come back. It's just not kind of the right time with U.S.-China relations. Still got the hangover from COVID. I'd rather miss out on a little bit. But when I did invest in China, and when I go back, Alibaba is one of my favorite, right? It's the, if you will, Chinese Amazon, online shopping company out there. And it's really pretty neat. You can go right to their website, alibaba.com, and buy something today if you want. No problem with that. But it's a tech firm. It's a huge tech firm. So now you've seen, Microsoft invested in the Chat GPT. Then yesterday you saw Google release its Bard AI bot, and the stock goes up almost 5%. And today, you know, Alibaba decides that they're going to release that they're working on their version. So is it going to be good? I don't know. Is it going to be standard? You know, I'm starting to think that this the chat bot might be more of an advanced, you know, when you go to websites now, they always have that virtual chat and it's kind of useless. I get it, right? Unless you're asking the most simple question ever. Um, you know, this might be something that just pops up where everybody has it, right? For you to be able to interface with a website. I don't know if there's an Ankerstar Wealth, chat bot going to our website anytime soon, but that would be kind of the theory, right, of kind of the next evolution. So it's good overall for Alibaba that they're working on something like that, or at least they're announced that they have. When you take a look at the stock, I would say as a U.S. investor, stay U.S. still. Right now, even though you can see that in November, you know, it was down at 60, basically took a double up to 120, kind of made everything back. Now it's selling off. I think if you're a U.S. investor investing in China, you're throwing darts a little bit as far as your timing. You just don't know. The Chinese economy supposedly has been doing well. So supposedly it's got its feet under it. But yeah, I would stay a little closer to home for investing instead of branching off into China at this time.
Last, mortgage demand increased as mortgage rates settled some recently. Is now the time to buy a home?
Yeah, well, here's what I tell folks: that the time to buy a home is right when it's for you and your family, and you don't necessarily. I mean, you want to be prudent with the use of your resources, right? But you don't want to necessarily have the money. Uh, let's see, the money tail wag the home dog, or however you would say that. Don't make the decision based on finances if you can swing it. There's a time to move for jobs, schools, family, whatever your personal reason is. There's a time to move, and you kind of just need to make the move at that time. Once you get to the point in life where you're a homeowner, then you're generally just trading one situation for another versus trying to get to that initial entry. So the initial entry is obviously different because you have to save some equity in the bank, and then you have to allocate that to a down payment. Then you may be up or down in your home. But once you've been homeowner for a while, you're going to be up all kinds of equity for the most part. And you're just trading that around to wherever you live really for the rest of your life, right? So what's going on in the housing market is I wouldn't necessarily try to time this because it's notoriously unpredictable. But for interest rates, I think we're up at six point something percent, 6.18 is your 30-year fixed right now, which is kind of crazy, right? With a lot of us sitting here at 3 or below percent. But I don't think I was having this conversation with a client yesterday. That you don't need to be in a hurry, if you will. I think house prices as a whole will come in because of the increased mortgage rate, and that a lot of the movement, there just hasn't been a lot of movement in the housing industry because the rates went up so fast last year with the 4 straight 3/4 point rate hikes in a row. It moved so fast. A lot of people are just like, take a deep breath, hunker down, wait. So I don't think we've really seen the prices come down to their natural place. So, another 5-10% certainly worth waiting for because you're talking big numbers, right? But so to summarize, move if it's the right time for you and your family. If you're looking at picking up like an investment property or something, I think there's more pain ahead. Whether or not we have a recession, certainly if we do have a recession, there will be people that will get squeezed by that. And then that presents, some distressed real estate opportunities where you can go in, and if you're a cash buyer or you have the ability to get financing very easily, you can go in and get a property on the cheap. But I think that would be towards the later of this year and towards the end of this year, excuse me, and we would need to have some sort of significant recession to kind of create that environment for you.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.